Reliance Industries is a stock in focus. The heavyweight has been underperforming the Nifty on the back of a variety of reasons. Sajeet joining in to explain what's ailing RIL.
That's right. That's the right word. What's ailing RIL? For the last 3 months, we have seen the stock correct nearly 14%, dragging the Nifty down as well. So if you look at Nifty, it was down nearly 3% odd, and RIL is down 14%, and that's because RIL is third most heavyweight in the Nifty with over 8% weightage there, and that's one of the reasons why we're seeing a weakness in Nifty going despite Nifty rising nearly 14% in 2024. Now RIL will be breaking, may end up in a negative territory for the year 2024, and that's happening after nearly 10 years. In 2014, it gave a negative return of 0.3%, and that's and since then it's been giving a positive return every year, and that streak might end in 2024 because of the kind of underperformance which we are seeing. If you look at the monthly, movement in the stock, it is from January and June have been the best month for the stock, with the stock giving nearly 10% and 9% return there. But we've seen in the last 3 months how from September there is a negative return which is coming in RIL, with October being the worst. We give nearly 9.8% negative return coming in the month of October there, and December so far the stock is down 2.3% there. So on an overall basis, there is a negative return coming in from Reliance, but there is more fundamental which is backing this underperformance of this heavyweight. The first being the retail operations are underperforming. It's facing a lot of issues in retail. There's a consolidation happening, and the operation level there is a lot of issues which is coming in, especially with respect to the modern retail and the quick commerce which is coming and hitting all retailers there. Telecom ARPU ramp-ups, or average revenue per user ramp-ups, are slow, despite the fact that there has been some price hikes which have been undertaken by all telecom companies, but ramp-up are slow there. Oil and petchem margins are under pressure globally as well because of the demand scenario which is happening there, and then the new energy operationalization is delayed, and that's something which is also hitting Reliance because the cash flows have come is not as per expectation, so they are also raising debt from the open market, and that is something could be a worry going forward for this group there. So there are 4 or 5 business segments which are not performing to the mark, and that's one of the reasons why we are seeing this underperformance, over and above the fact that the monetization of retail and telecom is yet to happen, and there is no timeline for that monetization which the street is expecting. Tamana?